let's say a Bitcoin strategic reserve is established. Now, there are multiple ways they can do that. Obviously, they can just hold on to the Bitcoin that they already have that they confiscated from Bitfinex. The morality of that is, put that aside. They can just choose to do that, right? They can also sell off some gold reserves to buy Bitcoin. They can print dollars to buy Bitcoin. There are multiple tools available to them. But I'm curious what your outlook is as far as what does the establishment of a strategic Bitcoin reserve actually mean for the dollar system? Is this something that ends up actually strengthening the dollar system, perhaps while weakening the dollar itself? Does it reinforce the dollar as the world's reserve currency for trade while acknowledging that there is a new neutral reserve asset? Or what's your outlook on that as we go forward? How do you think this actually begins to affect the larger dollar system and then also just the global monetary system?
Yeah, so I do, if you watch and listen to a number of Scott Besson's conversations throughout last year, something he said multiple times is it's not mutually exclusive that we strengthen the dollar system and weaken the dollar. And I think consensus at this point is that they are mutually exclusive, and I don't think they are. And one way you do that is by implementing a new neutral reserve asset, any number of ways that you've highlighted. And I think Bitcoin could absolutely serve in that role. It mechanically can do that by, if through some of the stable coin tether interactions, right, where you can regulate that the stablecoin market has to hold Treasury T-bills, and Treasury T-bills at some percentage of backing, right, at some collateral value. So I don't know, whatever. And if you do that and Bitcoin's price goes up, so say, whatever, let's say Bitcoin market cap today is 2 trillion, goes to 4 trillion in market cap. And right now it's call it a 10% of stablecoin collateral relative to that. Let's say it goes to 20%. Let's say it goes to 15%, kind of bank, right? So there's, in theory, 4 trillion times 15%. That's what is that? 600 billion. 600 billion. And 600 billion is relative to 200. Say it's all got to go into T-bills, right? So there's an incremental, to the extent that the 200 billion stablecoin market cap today is all in T-bills, which I don't think it is, but say 100% that extra $400 billion has to go into T-bills. Great, boom. You just found yourself $400 billion worth of T-bill demand that is more than happy to be financially repressed at negative 5%. Rates are rounding up to 5%. Tether paying 0, and boom, that's what you need. That helps restructure the U.S. Now, that's going to strengthen the credibility of the dollar system. That's going to weaken the dollar, right? Till you come out and say, listen, we're going to have negative real rates, and we're going to have, we're going to finance a lot more of these big deficits in T-bill markets at very low rates. That's ultimately more secularly inflationary. And, if the Fed's cutting rates into this, that'll get the dollar down. I mean, it's not going to crash the dollar, but it's going to get the dollar down, which is what needs to happen per earlier for systemic stability. This is going to drive nominal growth, real plus GDP. And then you layer on top of that some, reshoring, tariffs. There's a whole lot of other things you can do, but it could absolutely be part of the solution. And I think there are elements around the incoming Trump administration that favor this, that see this, that understand this. There's elements of the political establishment that do. It could work. It could work.
Yeah, it's interesting too, because looking at this, obviously in terms of other neutral reserve assets, central banks around the world have been buying a lot of gold in recent years. Obviously, they've been buying gold for a while, but specifically in recent years, I think just since the Russian sanctions, that kicked off kind of a larger wave of more intense gold buying by central banks. And the interesting thing for me about that is, okay, if you're just talking about kind of the strategic advantage and game theory of all this when it comes to a neutral reserve asset, obviously if everybody owns a neutral reserve asset like gold, and it's just a matter of what marginal amount more does one central bank own than another, there's not a massive kind of asymmetric strategic advantage there. But then if you look at a neutral reserve asset like Bitcoin, where purportedly none of the G7s have a massive stack of Bitcoin that they've begun acquiring. Yes, the US has the confiscated Bitcoin, okay, but there seems to be a huge, especially among the G7s, the massive first mover advantage here if one of them, as an American, I would say hopefully the US, decides to just start acquiring Bitcoin in whatever means they can, whether that's getting rid of gold or whether that's printing your own currency, whatever it is, you are going to obviously significantly impact the price with any sort of sizable buy, even if you try to do it fairly sneakily. But it seems that other nations are also kind of thinking the same way that the U.S. is right now, just from the way that, and there was a few headlines I saw, Russia's been using Bitcoin in some, foreign trade transactions. You have, even Putin's been talking more publicly about Bitcoin, who can stop Bitcoin? Nobody. It seems to be that this is kind of like, it's this thing that is out there that everyone is very much aware of now. Like, it's not a matter of you haven't heard of Bitcoin if you're one of these leaders. You know that Bitcoin's there, and it's a matter of who is going to be able to move first. Do you think that that any of these sovereigns are already kind of acquiring in secret in nations where they may have the political capital to do so? I think it'd be maybe a little trickier in the U.S. to do that just because of the checks and balances we have, but maybe some of these other nations can. Do you think this ends up just becoming a bidding war at a certain point where they realize, shit, guys, there's only 21 million of these things. All of us can print our own currency. We got to get there first. Is that what think might play out, or do you have a different outlook on this?
I think it's very possible. I think some of the geopolitics of it all, to your point, I think incent that on some level. I thought the Putin comments were very significant. It was essentially a blessing. And ultimately, in an energy-linked neutral reserve asset, as Bitcoin is, world's biggest energy producer, it would only take one, right? It would only take one, as we like to say in baseball, right? Is it possible? Some of them are, sure. I suppose it is. I don't have any view strongly on that. And then you kind of get into things around, carrot and stick around negotiations, around, because, part of the thought is, okay, well, you can go back to 2015. The former chief economist of the IMF, Ken Rogoff, said emerging markets should go for the gold. They said, listen, there's a shortage of risk-free assets. And the problem is the risk-free asset to date has been Western sovereign bonds. And there's now so much debt that further debt to create more risk-free assets is calling into question the solvency of these very sovereigns and these very bonds themselves, which mathematically, which we just ran through earlier in the show, can't be made nominally money good unless they print the money to do that. And so this whole regime of sovereign bond, Western sovereign bond as risk-free asset underpinning everything else, it's over, it's dead. It's just that future hasn't been evenly distributed yet. And Rogoff's solution was like, look, buy gold. The price will go up. And Western central banks have a lot of it. And so it's not like we'd be disadvantaged. Let's do that. And to your point, we've obviously seen that accelerate meaningfully since 2022 with the sanctions regime in Russia. But in theory, with gold, it was on everybody's balance sheet to a certain extent. There was, in theory, some level of coordination that is possible, right? Where I think a lot of people look at this intra-sovereign relations as in the same way they look at, a guy sort of day trading. It's like, well, if gold's going up, I want to own the most. And it's, yes, but the whole point of central banking is systemic stability, right? They have a money printer. They are not trying to make a profit. They can make as much profit in dollar terms as they want. They're trying to manage towards a political. And so what I mean is it wasn't about, hey, let's buy all the gold and then revalue gold. It's, okay, well, the system needs to change because the Western sovereign debt as risk-free asset is no longer risk-free on a real basis because they'll go broke unless they print enough money. In that case, they have to steal the reserves, purchasing power of the creditors of the system. And so the creditors are like, well, screw that. I'm not doing that. I'm putting my money in gold. So the system has started to kind of wobble. And so in theory, a coordinated effort would be, okay, well, China, you are X percent of global GDP. US, you're this, your different debt metrics, and everyone has something that approximates a representative pile of gold in front of them relative to their importance of the global economy before some sort of revaluation were to happen if it were to be with gold. Now, fast forward, we've got the geopolitical situation being what it's being. We've got Russia who's being difficult. On some level, there's some value to that, right? Because it's a little bit of it's a question of politics, right? Like where American GDP is 10 times Russia's GDP, so we should have 10 times the gold. Okay, well, take away Russia's oil. What's the value of U.S. GDP? It's like zero, because the world's short oil, the bond market crashes, and bond market crashes, housing's worth very little, commercial real estate's worth very little, all our banks are upside down, blah, 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 blah. Okay, so Russia's got a point. Like, hey, we should get our oil and materials. We want to be paid. This is worth something. Point being that you're seeing the breakdown of negotiated settlement, I think. And in that world, then you start to get into the game theory of what you were describing of, all right, well, let's start doing this. And particularly as the tensions ramp up and the geopolitical sanctions regimes ramp up. And, so it's not my base case that that's what's going to happen in terms of, hey, there's just going to be a scramble for Bitcoin. My base case is still some sort of negotiated settlement. But, if you'd asked me that a year and a half ago, 2 years ago, I would have said it was higher, negotiated settlement, lower, sort of, starting gun Bitcoin. And I think the odds of it, hey, fire a starting gun, Bitcoin's the deal, or the Bitcoin's a supplement, however they do it, I still think that's a tail outcome, a tail risk, a tail opportunity, I guess, depending on how you're sitting. But it's getting fatter. The tail's getting fatter, in my opinion, based on what's happening geopolitically and from a sanctions standpoint. So it's kind of not an answer, but kind of an answer. I don't have strong feeling about it.
No, I appreciate that. And just kind of speaking of oil, one thing you've talked about a decent amount, I know, at least on Natalie Brunell's show back in early December, and then just through some subsequent tweets and appearances, this idea of Bitcoin as the new oil. We're mentioning Russia's oil, so I couldn't help but bring this up a little bit. You've said previously that that's kind of your base case of Bitcoin functioning as the new oil. Can you unpack that a little bit? And then is that still your base case?
So the Bitcoin as a new oil thing was something that actually Peter McCormick brought up with Preston and I and Danny Knowles in conversation down in Nashville on a podcast we recorded. And by way of background, Peter said, look, we were at a party last night, and somebody's famous, his dad had been orange pilled by Trump, who told them that Bitcoin is the new oil. And at first I kind of thought, oh, that's interesting. It makes sense. It's energy linked, neutral reserve asset. Okay, like I kind of get it. And the more I thought about it, particularly in the aftermath of someone putting the Paul Ryan Wall Street Journal op-ed in front of me about, hey, we have a fiscal problem and stable coins backed by T-bills could help us fix that problem. And then more powerfully, the Treasury Borrowing Advisory Committee report that came out, I think at the end of October, had two supplements to it, which are unusual, but not highly so. But one of the supplements was digital currencies, how they can support the Treasury market. So like, whoa, maybe digital stable coins and how they could support the Treasury market. Whoa. Like Treasury Borrowing Advisory Committee is like the Wall Street biggest banks and sort of the sort of the who's who. And they kind of lay out some of the same stuff. It was like, look, the crypto keeps getting bigger. They're going to have more stable coins, and more stable coins means more T-bill demand. And, we should look at issuing more T-bills. So when I started thinking of it that way, it brought to mind this esoteric interview given a guy named Sheikh Yaman, who was the former Saudi oil minister back in the 70s and 80s. And he gave an interview to multiple different people in which he said that there was a meeting of the Bilderberg Committee in Sweden in 73, in which Kissinger came in and said, look, the price of oil is going up 400%. Get on board. And October 73 to April 74, oil went up 400%. And that did two things. That made oil sort of big enough to back the dollar, to basically recycle U.S. deficits into. And it also, as Yamani put it, robbed OPEC of its strategic. And what he said is, by the price of oil going up 400%, the United States went from basically increasingly too highly sourced to OPEC, some of whom were friendly, some of whom were not, but when it was becoming a strategic threat to the United States, to making economic the oil basins in Alaska, Deepwater Gulf of Mexico, UK North Sea. So all of a sudden, the political makeup of the United States' oil supply became much more favorably disposed, much more friendly. And The last thing that it reminded me of is there's a declassified State Department document of a meeting between Kissinger, I think Volcker, and one of Volcker's undersecretaries from 74, I think, 1974, in which they talked about how the Europeans were looking to use gold, to revalue gold to settle oil deficits, that they were suddenly in a position, right? Oil went up 400%. Now the Europeans are like, oh, crap, we're importing all this oil. We don't have Alaska. We don't have the Gulf of Mexico. We've got UK North Sea, but that's not going to really ramp yet. We're running all these deficits now. How can we pay for this? Because we're going to have a currency crisis. We can revalue gold higher. And one of the things that one of the speakers, whether it was Kissinger or Volcker or the other guy, was that if they used gold and basically oil bidding up the price of gold is what they're saying a lot, that one of the benefits was that it would remove the challenges, essentially, of increased Arab ownership of American industry and Western European industry. And would allow the Arabs absolute control over their reserves, right? The Arabs would have their gold there, okay, in the same way that Russia, we couldn't take Russia's gold reserves. And it was just a flow issue, right? Oil went up 400%. All of a sudden, the Arabs have nothing but money, and they start showing up and buying up Western Europe and America. Economically, that was an issue. Oil becomes so much bigger relative to where it had been historically. And if you just let a neutral reserve asset take those flows, it's sort of a win-win. And so understanding those not that well-known historical data points, and again, they're publicly available, and overlaying all of that with Trump's comments and the TBAC and Paul Ryan, to me, it increased the possibility that that's what they're talking about. Basically, let's just let Bitcoin go. Let it go. Let's say Bitcoin goes up 400% 6 months, just like oil did from April 73 or October 73 to April 74. Oh, by the way, under cover of a brief Mideast war, what's going to happen? Bitcoin goes up 4x, 5x over a 6-month period of time. That stablecoin number is going to go up a ton. Dollar's going to go down. The dollar system's going to be stronger. The whole Chinese recycling, we want a divorce from China. We don't want too much Chinese ownership of American industry, just like we didn't want too much Arab ownership of American industry in 1974. Great. Now we've strengthened the dollar system. We've weakened the dollar. We've made American industry more competitive. We've driven inflation and nominal growth. And we have provided the world a neutral reserve asset that is now big enough to recycle their dollar surpluses into, where they stop buying all of our stuff, which everyone, we're seeing signs of this everywhere. I mean, last week, Biden wouldn't let the Japanese, our friends, buy Nippon Steel. Or excuse me, right? So we're seeing these. So it's a very elegant solution with a historical analog was kind of my point. Same kind of thing. My base case is we are moving to a neutral reserve asset. I would have said 2 years ago, the odds of that being Bitcoin are tiny and the odds of that being gold are high. I would say I still think it's probably more likely gold, just given the central bank control. But the actions of the last 4 to 6 months with what Trump has said, what Ryan has said, TBA has said, the actions of this administration post election in terms of who they've appointed to where they've appointed them. Like if 2 years ago, gold's a neutral reserve asset must have, or else the system's going to break. Gold here, Bitcoin, like way down here is your odds. Like I would say they're doing this at a fairly rapid pace, all else equal. So that's sort of the whole background on that, how I've thought about it.